Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, consumers are still feeling the stress of too much debt. And what does the future of Canada Post hold? It probably won't look like its past. Plus, a former environment minister on Canada's current take on climate change. That's all ahead. First, for the week that was in business, it's time for the briefs. Canada showed strength in the labour market in September despite concerns about trade. The unemployment rate in Canada remains at one of its highest levels in years. Some sectors continue to struggle under the weight of tariffs, and others, including oil and gas, are making cost-saving cuts. That includes both Imperial Oil and Exxon. Meanwhile, it's expected that some government departments will begin to shed workers as part of across-government department cuts. This week, Service Canada said it would eliminate 250 jobs at the Passport Office based on new forecasts for demand. Prime Minister Carney's meeting with U.S. President Trump this week didn't yield anything concrete. Tariffs remain in place on steel and aluminum, and new tariffs on lumber and some finished goods are still pending next week. Still, the trade negotiators in D.C. seemed to signal they were happy with the meeting, which included a directive by the president to his teams to quickly reach agreement on some of those issues. A leading economist says the federal deficit could balloon to $100 billion this fiscal year. National Bank Stéphane Marion made the remarks at a Bloomberg conference this week where he called the upcoming budget the most consequential budget in a generation and noted that Canada has fiscal room to spend that some other nations do not. A strike by public school teachers in Alberta this week had 51,000 union members on strike and 730,000 students out of the classroom. Striking members do not receive pay while they're out. The key issues on the table are wage increases and staffing to support class sizes. Teachers in Alberta last went on strike in 2002. The U.S. government has taken ownership stakes in two BC mining companies. Its 10% stake in Trilogy Metals comes on the heels of a 5% purchase of Lithium Americas. The U.S. wants to reduce its dependence on critical minerals sourced in China. Trilogy Metals has a copper interest in Alaska, and Vancouver-based Lithium is developing one of the world's largest lithium plays in Nevada. And those are your business briefs. If there's one thing most likely to tip someone over the edge, it's a precarious job market. Grant Bazian is president of MNP. Thanks for being with us, Grant.
Thank you for having me.
I was really struck in your recent survey at the trade-offs people are making between meeting their obligations, using fewer utilities, choosing to eat less. This is alarming.
I would agree. It's when you're seeing almost 25% of the people reducing what they eat in terms maybe volume and the pricing, and reducing their utilities such as heat by almost 33% in order to make ends meet. That's definitely a concern. These people are definitely feeling, constraints in their life, and thankfully they're maybe able to make amendments by adjusting those costs, but it's definitely in a bit of an alarming trend.
And of course, we do know that labor market health is one of the indicators of how people will feel about their own debt, their ability to service their debt. As we look at, unemployment rates are at relatively high levels to what we've seen recently. Is it likely to make people feel more nervous given what's going on?
I would definitely say so. Uncertainty always drives anxiety and stress. And our survey is a sentiment survey based upon how people feel. And so when you have economic uncertainty through jobs or job loss or hard to get a job, warfare around the country, tariff situations like this, all that uncertainty creates anxiety, and it definitely reflects on what people feel they can afford for the future. If they are looking for work and they can't find work, or if they have uncertainty about the longevity of their work, they're making changes to adapt. But this is the first time we've seen indices like this, where people are actually, watching what they eat and controlling the thermostat to make things affordable for them. So it's a concern.
Absolutely. One thing we have seen is wages have been going up, right? We saw adjustments for inflation, and they're still running above 3%, almost 3.5% in terms of overall wage growth. Is that enough to change the affordability picture for some people, or is it just a game of catch up to the inflation we've already seen?
Yeah, I think it's a bit of both. Too early to tell. When people come in, they're not saying I've got a raise and I still can't make ends meet. I think it's a bigger problem. I don't think the wage increase will change many people's positions. In some cases, it will. And keep in mind that most Canadians are probably fine with what's going on. This is a smaller cohort of the population, but it is definitely a concern. Will wages increases compensate? probably not sufficiently. Maybe they'll turn their heat up a bit more, maybe they'll eat a bit more, but the lingering issues of their other debt is looming there. And the uncertainty of interest rates. I think 60% of Canadians' mortgages are going to be coming due by the end of 2026.
Yeah.
That's a big number. So interest rates are definitely a concern for people. And I think they're getting ahead of the game going, well, I might as well start budgeting properly now and reduce what I can. So they're smart.
And then I want to ask you, you and I have been around long enough to remember what happened in the early 90s with real estate. I'm not saying we're going there, Grant, but when we see interest rates coming down, so there may be a bit of relief on mortgages, we still might see people with mortgages that are more valuable than the market price of their home. Is there a territory here where we start to get into trouble if we see home and condo prices continue to decline? They haven't declined that much yet, but some markets we are starting to see a little bit of softness.
Yeah, definitely. I think that adds fuel to the fire. We have negative equity in property. Your mortgage supersedes the value. And I think that's already starting to happen in certain, like the condo market is probably a good market that you would see that in. That, like I say, adds fuel to the fire. It adds more uncertainty and anxiety for people. Just one more variable that Canadians are facing right now.
So good to have you with us, Grant. Really appreciate it.
Well, thank you for having me.
Grant Bazian is president of MNP. Coming up, if Canada Post is hopelessly out of date, what happens to all those workers? Stay with us.